The last Bitcoin bull market took place in 2021, with the Bitcoin price reaching an all-time high, just shy of 70k. It started the year trading at around 20k, then exploded above 60k on a couple of separate occasions, before retreating by almost 50% towards the middle of the year, and shot up once again to almost touch $70,000 in November. The previous bull market before that was back in 2017, when Bitcoin had reached a high of around $20,000, but its chart looked a lot differently, with each cycle having its own intricacies, and playing it correctly could make or break your bankroll. And the last thing you want is to be left holding a bag of altcoins that's down 99% since its all-time high and just praying that it will rise to the moon once again. But with that said, we prepared 10 essential tips that everyone should know to help you better navigate the next Bitcoin bull market. Regardless of what you invest in, gaining sound knowledge of its underlying merits is step number one in any investor's playbook. You absolutely must know what you invest in, and the same goes for Bitcoin or any altcoin for that matter. Familiarize yourself with Bitcoin's fundamentals, such as its total limited supply, utility, and adoption rates. You can also analyze historical price patterns, market cycles, and factors that tend to influence a Bitcoin's price. This knowledge will definitely help you make more informed decisions. And a great place to start learning about this is our Bitcoin fundamentals section on our website, called Bitcoin for Beginners. Once you have the fundamentals down, it's important to stay informed about both Bitcoin and the broader cryptocurrency market. Think about it this way. If you're investing in land, you'll undoubtedly analyze the factors that could impact it. These include the condition of the land, what you can grow on it, but also who your neighbors are, the general area where it's located, and so forth. The same goes for investing in Bitcoin. You should stay informed about what's going on in the market. You can read books, follow reputable news sources, join online communities, and in general, do a ton of other things that will help you learn about the technology. In turn, this will help you anticipate market trends and potential catalysts, which can maximize the return on your investment in Bitcoin. What are your plans for the money invested in Bitcoin? When do you want to cash out? Can you afford to lose it? Determining your investment objectives is paramount because it will also impact other important decisions, such as how much risk you're willing to tolerate and the time horizon. Despite being the largest and supposedly most secure cryptocurrency, it's still considered very risky relative to investments in traditional finance. Once you have the previous points all clear, you should be more or less ready to develop an overall investment strategy. Now, there are multiple ways to invest in Bitcoin. One of the more popular strategies is the so-called dollar cost average, DCA. It represents a way to buy Bitcoin in similar increments over a similar period of time. For example, you can buy $100 of Bitcoin every month. The benefits of it are that over a long enough period of time, you get the best average price. There are also other strategies to invest in Bitcoin. For instance, the so-called value averaging suggests adjusting your investment amounts based on market performance. For example, you can buy more Bitcoin when there's a bigger dip. In all cases, you must set guidelines for when to buy, hold, or sell Bitcoin based on your own risk analysis. Alright, now that you know how to invest in Bitcoin, the next step is to set your budget. How much do you want to spend? This is obviously a personal thing and it depends entirely on your current and projected financial situation. Setting up a budget and sticking to it will help you better track your investment and also manage your risk tolerance. Now, the most important takeaway here is purely to understand that Bitcoin is a risky purchase. That said, you should never invest more than what you can afford to lose without significantly impacting your overall financial stability. Alright, crypto scams and hacks happen regularly. Not only that, what were generally considered reliable firms, such as FTX and Celsius, have failed and left investors empty-handed. So, make sure to use reputable cryptocurrency exchanges or platforms to buy Bitcoin. Once you've bought, make sure to move your stash off-chain and keep it in a hardware wallet. As you might have already probably noticed, Bitcoin bull runs also result in massive expansion of the broader market capitalization. For reference, it reached over $3 trillion in 2021. This means that other cryptocurrencies are also benefiting from the Bitcoin price increase. It's worth considering having your investment diversified by including other promising cryptocurrencies or even blockchain related assets. Keep in mind though that if Bitcoin is volatile and risky, other cryptocurrencies are even more volatile and risky. However, a properly diverse portfolio can spread your risk and even capture additional opportunities. Now, it's very easy to get caught up in traders posting tremendous ROI screenshots. Approach these with tremendous caution. There will always be missed opportunities, no matter how much time and effort you spend or how well educated you are. However, there will also be new opportunities. So don't give in to FOMO, don't panic sell, and don't let your emotions get the better of you. Employ a risk management strategy and stick to it. Determine your exit strategies, use stop loss orders if it's a shorter term leveraged investment to limit your potential losses, and make sure you follow your rules. Staying disciplined is just as important as making the decision to invest in Bitcoin. It's important to remain committed to your strategy and not be swayed by any type of short-term market hype or the fear of missing out, i.e. FOMO. Remember that emotional decisions probably result in impulsive actions and most commonly lead to potential losses. Remain involved in the industry, at least to some extent. Keep up with the latest news, market trends, and regulatory developments in the broader cryptocurrency space. Make sure to adapt your strategy if it's necessary based on new information or changes in the broader market landscape. Well, there we have it. Investing in Bitcoin should be regarded as investing in multiple other asset classes, because of course it has its own specifics. The sheer volatility of the Bitcoin price makes it a lot tougher to stomach overnight swings in your portfolio. But if you have your sight set on the bigger picture, these become easier to get through. And by the way, one sign that you're overinvested is that you're constantly checking your phone, checking the price every hour. And with that said, remember, none of the content in this channel should be considered as financial advice, and you shouldn't make investment decisions based on it. It's highly advisable to consult a professional before making any decisions that may or may not be based on the above content, as this is solely for entertainment purposes only. And don't forget, if you enjoyed this video, then be sure to sub to the channel as we upload weekly. Otherwise, have a great day and I'll see you in the next one.